Good day. Today we are going to talk about a stale check. What is a stale check? So before we talk about a stale check, so let's talk about a check. So sometimes a business, because in these days most of the time the business makes the payments using the EFTs. Right, is that true? So which is mobile banking. Most of the time the business makes the payment using this one. So but sometimes the business can pay using a check. So now, what is a stale check? So what happens is that when the business or whoever is paying using a check, when they are paying using a check, the money does not leave the bank immediately up until that check has been used. So once a check has stayed, once a check has stayed for more than 6 months, or for 6 months, that check is now called a stay check. Okay, it is now a stay check. Okay, let me make an example. So let's say I'm a business A, right? Business A pays business B, right? So business A pays business B using a check, right? So let's say they're paying 500 Rand using a check. This happened on 1 January 2022. Paying using a check. So when I'm paying using a check, where am I going to record this? Because I'm making a payment, I'm going to record this square in a CPJ because I'm paying. So I'm going to record this in a CPJ. So I give business B a check. Right? I give business B a check. So of 500 Rand I've paid. So what needs to happen is that business B needs to take the check and then go with it to the bank so that business B can withdraw this money. Okay? So now let's say this. Let's say business B stays up until 8 June 2022 and still business B has not yet gone to the bank to draw this check or to take the money from this check. So once it is 6 months, now this check it is going to be called a stale check. So a stale check it is a check which has stayed for 6 months or more. So once it is 6 months, now it is called a stale check, which must then now be cancelled. So now business A has to cancel this check because now it has stayed for more than or it can stay for 6 months or more. Now they have to cancel this check. So now we're going to cancel this check. The third check is cancelled in a CRG, cash receipt journal, because when we were paying using a check, we thought the money was leaving the business, right? But then this money did not leave the business because this check has stayed for 6 months. So once it has stayed for 6 months, we have to cancel it. Cancel it where? In a CRG because there is now a stay or it has expired. That is why we are canceling it. We are canceling it because it has expired. Okay? That is one of the reasons. We record it in the CRG. That is how, or this is what we do. Okay? That is a stay check. So, but then because we're talking about a bank reconciliation statement, because the main topic here is a bank reconciliation statement. So how do you see this in a bank reconciliation? So a state check, um, because you are making a payment, right? So a state check, you will see it most of the time in the bank reconciliation. Because remember, um, the bank reconciliation statement, what you record in a bank reconciliation statement, it is something that is appearing in the cash channels but not in the bank statement, right? So a state check, it stays in a bank reconciliation statement up until it expires. Because if it continues to stay in a bank reconciliation statement, it means it means business B did not draw the check, so it is going to stay in a bank reconciliation statement because business B has not yet drawn the check. Because once business B draw this check, so the money is going to leave our bank. So it must be shown in the bank statement. So if it is not yet shown in the bank statement, it means we are still going to make it stay in the bank reconciliation statement. But once it stays for 6 months, we cancel it, we no longer show it in the bank reconciliation statement. And I'm still going to do an introduction of the bank reconciliation statement.